A cold shower for Bitcoin and the altcoins today, as Trump Media, a company closely tied to Donald Trump, has reversed course and decided not to launch its own crypto exchange traded funds. Today we'll look at whether Bitcoin still has a chance to recover despite the bearish sentiment and negative news, analyze Zcash's impressive 90% monthly surge, and discuss Cardano and Solana. We'd be extremely grateful if you hit the like button, leave a comment and subscribe with the notification bell. And if you don't know, we also have a mobile app where you can follow everything important happening in the crypto industry in real time. The link is in the description. For now, it's available only on Android, but we are actively working on the iOS version, so iPhone users will be able to download it very soon. Our first story today comes from the Trump Media camp, and it's anything but encouraging for the crypto market. The company behind Truth Social, the social network closely associated with Donald Trump, has officially withdrawn all of its crypto ETF filings, including those for Bitcoin and Ethereum. This is a major reversal, considering that just a few months ago the project was presented as an ambitious step toward entering the major financial markets. What happened? The partner that was supposed to manage the funds, Yorkville America Finance, suddenly changed direction. Instead of continuing with ETFs registered under the 1933 Act, they decided to switch to products under the 1940 Act. This may sound like a bureaucratic technicality, but the difference is huge. Funds under the 1940 Act are far more strictly regulated, with higher requirements for investor protection, reporting and oversight. Yorkville claims this is a better framework for their future products, but in practice it means one thing. Truth Social's crypto ETFs simply don't fit into their new strategy. The decision also comes at a time when the crypto ETF market is under heavy pressure. Interest is far below its 2025 peak and competition is brutal. Morgan Stanley, for example, recently launched a Bitcoin ETF with a fee of just 0.14%, making it nearly impossible for new players to enter. There's also a political angle. Some analysts warn that launching crypto ETFs from a company tied to a sitting president could create conflicts of interest and additional regulatory scrutiny. That likely played a role in the withdrawal as well. Despite the bearish market and negative Bitcoin news, some analysts see strong signs that the cryptocurrency may be preparing for its next major move upward. One of them is well-known on-chain analyst Ali Martinez, who highlighted two key signals worth watching. First, funding rates. According to Martinez, they have risen to 0.4%, the highest level in over 2 months. High funding rates indicate that the derivatives market is dominated by aggressive buyers. Traders are literally paying a premium to hold long positions, even as Bitcoin consolidates around $77,000 after the recent correction. This suggests that sentiment remains optimistic despite short-term pressure. Of course, such periods of excessive leverage often lead to sharp pullbacks that flush out late entrants. But Martinez emphasizes that the structural aggression in the market shows one thing: expectations remain tilted toward an upward move. The second important signal comes from the MVRV price bands. According to them, Bitcoin has a real chance to rise to nearly $95,000 as long as it holds the key $72,960 level. This is currently the last line of defense for the bullish scenario. If it's lost, Martinez warns that a deeper correction could follow, potentially down to the realized price around $54,270. While most of the crypto market is struggling to survive in the bearish environment, Zcash, ZEC, is throwing its own party. Over the past month, its price has surged by about 90%, making it one of the strongest altcoins right now. Why is it rising so fast? There are several reasons. First, Zcash has formed a classic cup and handle pattern, one of the most recognizable bullish setups in technical analysis, often signaling a major breakout. ZEC is currently in a zone where many assets are breaking out to the upside. Second, the privacy coin sector is waking up. While most cryptocurrencies are under pressure, privacy-focused coins like Zcash, Monero and Dash are performing much better. The reason is simple: regulations are tightening and people are seeking more financial privacy. Third, interest from major industry figures. Arthur Hayes, co-founder of BitMEX, recently said he believes Zcash's market cap could one day reach 10% of Bitcoins, a statement that drew massive attention. Fourth, Zcash is moving against the market, making traders view it as a temporary safe haven. What's next? If Zcash breaks the key zone around $625–650, the technical target of the pattern is around $1,090. If it fails, we may see a brief correction before another breakout attempt. Finally, let's look at two of the most popular altcoins, Cardano and Solana, both of which are currently under pressure. Cardano has dropped nearly 10% in the past week and now trades around 25 cents. Its market cap is just over $9 billion, placing it 16th among cryptocurrencies after being overtaken by Leo token and Zcash, which held up better during recent volatility. Analysts warn that the risk of further decline remains high. Popular ex-user Sebi, usually bullish on Cardano, notes that ADA was rejected from the upper boundary of its descending channel, which could lead to a retest of the bottom around 22 cents. Still, he suggests this might be the last dip before a pump if buyers step in. Alpha Crypto Signal also sees weakness, warning that losing support at 25 cents could trigger another leg down with stronger bearish momentum, while reclaiming it could give bulls a chance to reverse the trend. Solana isn't looking much better. According to Ali Martinez, SOL has been trading within a well-defined channel since February, with the upper boundary near $98 and the lower one around $78. Martinez previously noted that a breakout above the channel ceiling could spark a strong rally, but SOL failed to hold above that level and now trades around $85, down roughly 12% for the week. He warns that the price may now head toward the channel bottom at $78. Another analyst, Ted, points out that SOL's RSI uptrend has been broken, meaning the price needs to stay above $82–84 to avoid further downside. A daily close below that level won't be good for Solana, he said. Adding to the bearish sentiment, recent filings show that Goldman Sachs fully exited its SOL ETF exposure in Q1, a move that often signals caution and can weigh on market confidence. Still, there is a glimmer of optimism. Net inflows into spot Solana ETFs remain positive, with incoming capital consistently outpacing outflows, and the last trade day was back on April 30th. That's all for today, friends. See you tomorrow.